It is unclear how much is already priced in, but markets should prepare for full U.S. China decoupling, assuming a scenario with zero trade between the two countries. So far, during Trump's second term, China's response to all Trump's tariff has been swift and assertive. China responded to Trump's April 2nd additional 34% tariff with a matching 34% tariff. So far, most countries stayed on the sideline and observe, and or they are seeking to negotiate with Trump. Trump is using this situation to identify which countries might align with China in challenging the U.S. So far, out of all the BRICS countries that are tariffed by Trump, only China retaliated. The rest of the BRICS countries are seeking for negotiation. Trump is assessing the global responses to determine its future allies and adversaries. Since China is the only major economy that decided to implement counter-tariff, Trump has decided to go hard on China. On April 7th, Trump warned that if China doesn't withdraw its 34% counter-tariff by April 8th, the United States will impose an additional 50% tariff on China starting April 9th. Trump justified his action as a way to eliminate trade barriers, achieve free trade, and reduce trade deficit. However, he believed China is responding by adding more barriers. And that's why he's doubling down on the tariff to inflict pain. In the title, I said prepare for full U.S. China decoupling because China's Ministry of Commerce responded immediately, calling the U.S. tariff threat a mistake on top of a mistake and accusing the U.S. of extortion. It warned that if U.S. insists, China will fight to the end, which I interpret as full decoupling. Right? To the end means the two countries no longer do trades. So China appears ready to go hard unless Trump backs down. And if you want to look at a deeper analysis between U.S.-China trade relation, check my video dated on April 6th, where I break down the trade between the two countries. I think a full decoupling between the two could lead to a stagflation in U.S. and a deflation in China. As a result of the tariff, the U.S. stock market has been hit hard, with $5 trillion wiped out in just 2 trading days. The sell-off is being led by smart money. Hedge funds are driving the downturn. Latest Goldman Sachs Prime Book data shows that hedge funds are net sold over 20% of the U.S. equities from their portfolio year to date. And the sell-off intensified in April, signaling a growing pessimism among the institutional investors. It's not just U.S. equities. Hedge funds are also dumping global equities at a record pace. According to the same Goldman Sachs Prime Book data, global equity selling hit -7 standard deviations. It's the fastest selling on record. The next ticking bomb for U.S. stock market is European Union's retaliatory tariff. If it's triggered, I think it would mark the bottom of the current market correction because European Union as another world superpower fighting against U.S. would be a maximum or climax of bad news, and usually that marks the bottom of a correction. So far, European Union has only announced retaliatory plans but has not acted yet. Elon Musk is actually proposing a zero tariff system between US and Europe to create a free trade zone. In recent talks, Israel is actually setting itself up as an example. Israel Prime Minister Netanyahu pledged to remove trade barriers on US goods and reduce Israel's trade surplus with US. This aligned with Elon Musk's zero tariff idea. So there is still a chance that US and European Union can work something out, can negotiate to avoid a tariff spiral which turns into a full-blown trade war like what's happening between US and China. So it's clear why Elon Musk is pushing for easing tariff tension because his net worth has been taking a hit. Despite remaining the world's richest person, his net worth dropped 38% in the past 4 months from $486 billion in December 2024 to $300 billion now. He is feeling a lot of pressure and pain as a capitalist. And many of Trump's rich allies are feeling the pressure and are speaking out. JP Morgan CEO Jamie Dimon wrote in a letter to shareholders that tariff will slow down economic growth and cause inflation, and is urging for a quick resolution. Hedge fund Pershing Square founder Bill Ackman, a Trump supporter, also called the tariff an economic nuclear war and is urging to pause. BlackRock CEO Larry Fink said U.S. is already in a recession. And as the economic strain grows, especially the stock market reaction, a lot of business leaders around Trump are advocating for concerns. So Trump is also facing criticism from within his own party, the Republican Party. Iowa Senator Grassley is leading an effort to restore congressional control over tariff. So he's pretty much saying a president shouldn't have the power to sign executive orders to impose tariff. It has to be approved by the Congress. And Texas Senator Ted Cruz, usually a Trump ally, warned that tariff poses enormous risks and would cause a bloodbath for Republicans in the midterm, which is still far away. So in theory, there's a lot of time for negotiation between now and midterm. So despite the market turmoil, Trump hasn't shifted his stance. He appears to be committed to play the long game, viewing the current economic pain as necessary to achieve a long-term goal. But the critics are saying that deficit is bad, is a flawed idea. As an issuer of global reserve currency, the U.S. runs trade deficit to supply U.S. dollar abroad. Critics question Trump's tariff wall will push toward U.S. self-sufficiency, as it would disrupt global dollar access. And if the U.S. achieves trade balance with no deficit, fewer dollars would circulate globally, and this would reduce the amount of dollar available to be recycled back into U.S. assets and markets. The U.S. dollar's share of global reserve fell to 58% last year, down from over 70% 2 decades ago, while non-traditional currencies gained ground, such as Australian dollar, Chinese yuan, Canadian dollar. So if you imagine a world where U.S. builds a massive tariff wall around the United States while other nations continue to free trade or relatively free trade, these countries in the free trade world could bypass the U.S. dollar. They can trade directly in their own currency. This shift, if it happens, it could weaken the dollar's role as a global reserve currency and global settlement currency. So that's why the critics are saying Trump is playing a risky game. Thank you. Please like and subscribe to my channel.